So recording. What's the revenue account for Net Solutions? And notice the order. And this is going to be important. You're going to want to be able to pick out where things end. These are all in order. So notice we start at the top with cash. What type of account is cash? Asset, liability, owner's equity, revenue, expenses. What is cash? Asset. Who said that? Asset. Good. Okay. Something the company owns that has future economic value, right? That's the most economically value asset that we can have is cash, right? Well, so far. We'll see how the dollar does going forward. Okay. So cash is an asset. What about accounts receivable? What is accounts receivable? That's when customers owe money to the company. Good. So is that an asset? Is it tangible? Can you touch it? No. But what do we own? We own the right to collect that money. That's why accounts receivable is an asset. We own the right to collect that money. We can send the take back man after them, right? Supplies, is that an asset? Yeah, that's stuff that I'm using in my office, put it in the closet so that we can use it, okay? Has economic value. I could sell it. I can buy it and I can sell it. Supplies, that's an asset. So you're starting to get a trend here. Prepaid insurance. What's insurance? We pay for a policy that insures us against loss. If we have any kind of a accident, fire, theft, or flood, then the insurance policy is going to pay us for whatever asset is insured. So remember when we had the trucking company, we bought an insurance policy on that truck in case we wrapped it around a tree, right? So that would pay for the truck if we destroyed that truck. So does that have future economic value? Absolutely. Well, if I wrap it around a tree, I'm going to be really glad that I bought that policy because it's going to pay me money. Okay, that's economic value. So is that an asset? Absolutely. Let's see what else. Land. Is that an asset? Absolutely. Best kind, right? Can't blow it up, can't carry it off. Office equipment. Is that an asset? Absolutely. What about? Remember we talked about accumulated depreciation. What is that? Depreciation is going down the using up of a fixed asset. I didn't know that. I'd write it down. Depreciation is the using up of a fixed asset. What's a fixed asset? 3 attributes. So it's something I own, right? That's tangible. I can touch it. It's long term. It's going to last more than a year. And I'm using it in the business. So those are the 3 attributes of a fixed asset. If I know that, I'd write that down. 3 attributes of a fixed asset. Long term, it's going to last more than a year. It's tangible. I can touch it. And I'm using it in the business. Okay, those are fixed assets. Fixed assets depreciate because I'm using them. I'm wearing them out. I ran the wheels off of that truck. Okay, so that's why it depreciated because I was using it. I was wearing it out. Okay, so accumulated depreciation is how much that equipment, that fixed asset has been used up over its whole life. Has accumulated from the beginning of the time I bought it until the balance sheet date. Okay, how much has it accumulated? So depreciation expense, if I look down below, I see depreciation expense. That's how much I estimate that my fixed assets got used up during the period. Okay, so notice the period at the top. 2 months ended December 31st, 20Y3. That's the period. So that depreciation expense, that's how much we estimate that they got used up during that period. Accumulated depreciation is how much it got used up from the beginning of its life until now. Okay, there's a principle in U.S. GAAP or accounting system that says fixed assets have to stay on the balance sheet at cost. So if I look at land, that's not its fair market value. That's how much I paid for it. That's its historical cost. Okay. Same thing for office equipment. That $1,800, that's how much I paid for it. And the accounting system is designed that way so that we can always see, yes, they have office equipment. Yes, they have land. That's how much was paid for it. We don't have to adjust that value when that office equipment goes down in value. We're going to record accumulated depreciation, which is the estimated using up, but we're not going to revalue it at fair market value. Okay, so it's always going to be cost. Anytime I look at a balance sheet, that's cost of those assets, okay? Okay. Let's see, what else? So accumulated depreciation. So that is an asset, but it's what we call a contra asset. It's the opposite, contra, opposite of an asset. So it's a negative number. When we put that on the balance sheet, we're going to put it in brackets and we're going to subtract it from the total asset. Okay? Accumulated depreciation. Don't forget that. Wages payable. What type of account is that? This liability. Okay, what's the liability? Everything the company owes. It says payable, right? Who do we owe that money to? The employees, right? Wages payable. Okay, so what we've done is we've gone now from assets down into liabilities. So notice they're in order. We've listed all of the assets. As soon as we see that first payable, we know that we're now into liabilities. So first thing you're going to want to do is probably separate this thing, okay? So you got the end of the assets, the beginning of the liabilities. What else we got? Unearned rent. What type of account? Liability. Very good. We have somebody's money and we have not earned it yet. So that's a liability. Excellent. Common stock. What type of account? Good guess. So we've now crossed over into what I call it contributed capital. So we've crossed from liabilities now into equity. So our common stock account is the contributed capital for a corporation. Contributed capital. Okay. What's next? Dividends. That's actually the reduction of owner's equity, right? Remember, it's minus sign. Okay, so that's how much dividends got paid out to the owners during the period. And then we get into fees earned. What type of account is fees earned? Everything the company earns is called what? Revenue. Good. So we passed from equity down to revenue now. Okay, see the order? Assets, liabilities, owner's equity, revenue. And then we have rent revenue. What's that? Revenue. Wages expense. So now we passed from revenues to expenses, okay? And everything else is going to be an expense. Supplies expense, rent expense, utilities expense, insurance expense, depreciation expense, miscellaneous expense. Okay, see the order? The only thing that's not really in order is dividend. We put dividends on the end when we draw the accounting equation, but it actually goes up in the equity section. Okay, makes sense? Can do. So the first thing you're going to want to do is be able to take your trial balance and break it down into categories, and you know what those categories are, okay? And of course, we'll do that again. All right, next. Stop, it's flying. Okay, so let's produce an income statement. Income statement has all the revenues and all the expenses and either the net profit or, if the expenses are larger, the net loss. So let's do an income statement. What's the revenue? And we want to use that adjusted trial balance column, that far right-hand column is the one you want to use. The far right-hand column, adjusted trial balance. 16,840. So that's going to be fees earned. I forgot that number already. Yeah, 16,840. On the far right-hand column. And teach. Remember, I'm giving credit if you teach. So help your neighbor. Okay, look at the trial balance. So you see your fees earned, that's your revenue account. Okay, good. All right, and then I'm actually going to put, because rent revenue is not a part of normal operations, I'm going to put it down in other. Because our normal business is earning fees. Other income goes down in other. Its own thing, its own separate category, yes. All right, then we have wages expense, or what, 4525? 25. And Supplies, rent, utilities, insurance, depreciation. Supplies, rent, utilities, insurance, depreciation, miscellaneous. Insurance, depreciation, miscellaneous. So that's all my expenses. And of course, I should put the word expense, but I'm not going to. So 4525, 2040. Somebody help me. Well, you're all busy too. 1600, 985, 200. That's 50. Of 50, and then 455. Okay. And then, okay, my rent revenue was how much? 120. Okay. All right, so I'm going to put here total expenses and add those up. Did I probably made a mistake. Oh, I got wages. Yeah, supplies expense 2040. Supplies expense, not the asset. Okay. So only thing we're putting on the income statement is revenues and expenses. Okay. But that's a good catch because you have supplies, the asset. That's the supplies that haven't been used up yet. Supplies, the expense, are the ones that have been used up. Okay. The using up of an asset is a what? When an asset gets used up, it becomes expense. Okay. I'm going to say that a lot. That's important. The using up of an asset is an expense. When the insurance policy gets used up, it becomes what? Insurance expense. When the supplies get used up, it becomes supplies expense. When the fixed asset gets used up, it becomes what? Depreciation expense. Okay. All assets, when they get used up, become an expense. Okay, good. So that's why you have prepaid insurance. That's the part that's not used up. Insurance expense is the part that is used up or that got used up during the period. Okay. Okay, so I need some totals. This makes sense? This is going to be important to know. This is how we determine whether we're making money or losing money, right? If you don't understand accounting, you really don't know. I mean, I've done tax returns for people, and they didn't have a clue whether they had a profit or a loss until I told them. $98.55, my total expenses. All right, and then my other. Now notice that this is rent revenue, so I'm going to add. Actually, I'm going to move this down. All right, so this is income from operations. Okay, so revenues minus expenses is going to give me income from operations. Then I'm going to put my other. I hope I didn't make a mistake. All right, so my income from operations is $69.85. Why is that called income from operations? Because this is my normal operations. That's how much I earned, and this is what it cost me to earn it from. So from operations, I've earned $6,985. Rent, that's an ancillary. At my office, I own my office building, but I also have an apartment building behind me. So the rent off of that building is just ancillary. My main business is accounting fee. Okay, so ancillary goes down in other. So rent is not my main source of income, just a sideline. I can just rent that because it's there. Okay. Okay, so sideline stuff goes in other. All right, so now my net profit is going to be the total. So 7105, we hope, is my net profit. Of course, I could run that again and see. I did. Does that make sense? Revenue minus expenses equals income from operations plus my other income equals my net profit. Revenues, that's everything I earned. minus expenses. That's what it costs me to earn that money. Income from operations is $69.85. My rent is $120. So my total net profit is the income from operations plus the rent. Yes, sir. Now I add this real fast. Did you add? Now I added up all of these and got 98.55. 9,500 is what you got there. Like I said, I just did it once, so I may have made an error. I thought I was wrong one time, but I was mistaken. You got the same as me. Okay. So maybe you fat fingered it. I thought I might have fat fingered it, but maybe you did. So what we do in accounting, we always run the numbers twice because humans make errors, right? Humans make errors. So we always run the numbers twice. Of course, by the time I do the balance sheet, I'm going to know whether I'm right or not. Okay, so they good so far? This is good. Asking questions. You need to clarify your understanding. Don't just sit there like a knot if you don't understand it, because you're not going to get it later. Okay, it's best to get it now so that you don't record a bad understanding, right? Does that make sense? Because everything that's happening right now, you're recording it on your little tape recorder in your brain. And we don't want to record bad information, right? It's right? Okay, thank you. And it's okay to make a mistake. I made a mistake one time. And that's why I'm divorced. Happens, don't it? Okay, next. Is everybody good with this? Now we're going to do more of these. Okay, now this is an assignment. So you need to put this in a Word document or a spreadsheet or a piece of paper, take a picture, put it in that box, because this is a graded assignment. All right. Yeah, this is Net Solutions. This is Net Solutions. So put this in that box. Probably not. Snow slowed us down. So no big. If we haven't covered it, don't worry about it. Actually, I do want you to go ahead and do, what is the next one after Net Solutions? Is it sciatica? Okay. Go ahead and work on that. See if you can knock it out. If you don't have it finished by Friday, that's okay. 98.55. And check me on this. Now, if you don't have a calculator with you, that's okay. That each one of those machines has Excel on it, and it's a great calculator. So just use Excel for a calculator, or you can use the computer's calculator. You can just pull up that little calculator app and use that. Yeah, go ahead and work on it. Yeah, I think in a document when you under sciatica. Okay, I'll stick it in there. Don't worry about it. We're behind because of the snow. We're behind. That's okay. No problem. And I don't adhere to dates until we kind of get rolling, and then we'll start adhering to it. Okay, so we good? All right, so next, I want to do the next statement, which is the statement of retained earnings. There. So that's the income statement. Statement of retained earnings. Retained earnings. And the way we do that, and I want you to remember this formula. Beginning retained earnings, I want you to write it out. I'm lazy, you're not. All right, this is retained earnings. Okay, so beginning retained earnings, we don't have any because this is the company's first month. They just got started. So beginning retained earnings is 0. Plus net profit. And I want you to remember this formula. Of course, our net profit was there, minus dividends. How much were our dividends? 4,000. Equals ending retained earnings. So there's our ending retained earnings. And that's what we call a statement of retained earnings. So what can we learn from the statement of retained earnings? We know it's the first month. We know we earned a profit, and we know that the company paid out a dividend and that they have a positive retained earnings, and that's a good thing. Starting to make sense? Still don't have my attendance schedule made up, would you please? There you go, teach. That's right. Help your neighbor. Good. I hear lots of teachers. That's good. What is dividend? Somebody help him. What's dividend? So it's like interest. So remember, if we borrow money to finance, we have to pay interest. If we use equity, we have to pay a dividend eventually. So if you came to me, you were starting a business, and you say, I need $50,000 to start my business, I'll write you a check, then eventually I'm going to want some money back, right? So you're going to pay me, as you're earning money, you're going to pay me a dividend, and that's a return on my money. But the difference between debt and equity, and we'll talk about this more as we go along, is that debt, when you sign that note, it's got a date when it's due, right? And you'd better hit that date. Otherwise, the take back man might be coming to break your legs. Okay, so debt has a due date. Dividends do not. Okay, brand new companies don't pay dividends. Why? Because they need the money for growth. Okay, so only mature companies pay a dividend. So companies only have to pay a dividend when they have the money to do so. So there's less risk to financing with equity than there is to finance with debt, because you don't have to pay on a schedule. Okay. On the balance sheet, it would have been right. It would have been right underneath common stock. Exactly. Yeah, it would have been in that equity section. So you're going to learn sections: assets, liabilities, owner's equity. It would be right there in that owner's equity section. Good question. Next one we're going to do is the balance sheet. So we've got two of them finished. Now we're going to do a balance sheet. Yes, and you have to do them in this order because you have to know the net profit so you can do this one. We have to know the ending retained earnings so we can do this one. So that's why we do them in this order. How am I doing on time? I'm out. All right, I'm going to do this real fast. Still here? No. Balance sheet. Yep. So on the balance sheet, we list all of our assets and all of our liabilities and our owner's equity. And the total assets is going to equal total liabilities and owner's equity. That's why we call it a balance sheet. It balances. So let me rattle off assets right quick. Accounts payable, go ahead. Go ahead. Okay, I'm good. Okay, thank you. Okay, all right, so give me the numbers. Owner's equity, cash, accounts receivable, supplies, prepaid insurance. Oh, liabilities, sorry. Cash, somebody give me this. Okay, accounts receivable, 2,220, 2,000, accumulated depreciation? It's in the other column. $50. Okay. Okay. So now if I add that, $26,475. Accounts payable. Okay. Wages payable. 250. And then unearned. This is a recording. All right, and then common stock. And our retained earnings was 3105. All right, so there's my liabilities. Uh-oh, I don't balance. I've got a mistake somewhere. It's probably in my assets up there. Yeah. The liabilities, what about it? Thank you. So what I'm off $1,000. Got it? This. All right, does anybody see the $1,000? Added them up, subtracted accumulated depreciation. Oh, accounts receivable is 27. Okay. All right, 2069. So now what do I have? Do I balance? I balance. $4.95. It's okay. It's okay. Okay. All right. So somebody read me the wrong numbers. That's okay. We all make mistakes, right? I made one once. Okay. Good. So we did our first set of financial statements. Everything except no. So remember the accounting equation? What does it say? Assets equal plus owner's equity. Okay. And that's how it balances. So this shows you the accounting equation. Assets equals liabilities plus owner's equity. Right. And if you balance, pretty good indication you're right. Okay, good. We did our first set of financial statements. So write that up, take a picture of it or whatever, put it in the box. This is your first assignment. And we just did it together. But don't purge it because we're going to do it again and again. And thank you for staying over. I don't intend to keep people over, but I'll try